Is Comstock Mining stock a buy? Worth of healthier choices stock? We'll begin with Comstock Mining. Comstock Mining closed the session of the 17th of February 2021 at $5.79. In the post market, I think it closed slightly down. And today, the 18th of February, its earnings outcomes are expected. And also, yesterday, it triggered a 52-week high event of $8.10. And we have this piece written on Investor Place. It says it's acquiring says shares of Comstock surged more than 230% after a deal that will give it control of Unico Corp, a lithium-ion battery recycling company. Comstock will pay $4.5 million in cash, 3 million shares of its restricted stock, which represents a consideration of $10.75 billion. So I guess by the time you merge the whole its control or stake in Linico and all that stuff, probably market participants saw the need to jump in right away and take advantage of that. And then it says obviously we all know that Europe, US, and China are quickly shifting to a vehicle electrification. Lithium demand is set to soar through the decade. Right now, lithium stocks may be a better way to play the EV megatrend than EV stocks themselves, according to the author of this piece. While lithium stocks have been volatile, that may end up benefiting alongside investors. That's according to Andrew Bowering. He's the founder, director, and financial officer at American Lithium, a stock we have covered on this channel. Bowering has spent 35 years founding and developing successful mining companies worldwide, so he knows a thing or two about lithium stocks to buy. He said there's no replacement for lithium's use in the way the world will generate, store, and use energy, but ones of continued supply challenge. He said he believes by 2023 the market will be in complete disequilibrium and prices of the commodity will ratchet higher, suggesting big returns for investments made today near the bottom. Lithium battery technology will last your lifetime, according to that author. And currently, we have all of that has seen Comstock's market cap rise to $467.8 million, and so only 3 million share, or rather 80 million 0.79 million shares outstanding. So they're taking 3 million of let's assume 3 million of that. So 3 million times that's what they're using in that acquisition. So 3 million today is about 15 million 3 million shares will be $15 million. So well, they mentioned $10 billion there, so I don't see how that comes in, but in any case, today's volume was heavier than usual, trading at 205 million 0.37 million shares versus an average of 3.74 million shares per day during the last 12 months. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. So this is the slope of the indicator. It is positive and suggests that buyers are presently more active than sellers. Okay, and it's also, the stock is also in a bullish trend. It's you can see that the 200-day trend line is upward sloping, and the MACD histogram is above zero. We can see that the MACD histogram is above zero. Yes, it's at 0.3, and then the 14 slow stochastic oscillator is rising, indicating that momentum is also strong. So it's at 37.4%. So it's it's right now it is hot, but I wouldn't recommend that you buy the stock right now. You just have to hold on and see how it goes. Wait for it to cool down a bit, and then if you want to jump in, jump in. So we can see that it does pull back. sometime also in January and early February this month February. You can see that this is the 1st of February. It was at a high of $2.93 and it pulled back thereafter. So by the 5th of February, it was already getting support from the 10-day trend line, and since that time it also extended as well, and then pulled back again. Now this time around even pulled back below the 10-day trend line, and that was from where this all came about, and we now have this 230% increase. So I would say yes. Yeah, I mean, there's also there's a chance that it may not like pull back anymore and come down to as low as $1, $2 or thereabouts. But I don't think I would say yes now jump in after he has racked up a 200% gain. Okay, just give it some time. Always observe and see what's going on. And if you're really going to jump in, not with a lot of money, not with anything you can afford to lose, definitely the stock is probably going to outshine American battery metals. Who knows? But for now, I wouldn't say as of the 18th of February, it's not the time to jump in. It's currently at a high over 230%. So we'll continue to update you. We'll continue to observe and monitor and watch. So let's move on to healthier options. And healthier options closed the session of the 17th of February at $0.043. And I believe in the post market already or something like that, about 5.5 million shares have been purchased, and only 226,712 have been sold. And there's this piece written on Seeking Alpha. So the summary of it all is that Healthier Choices is a small retailer of organic groceries and vaping products that hasn't changed, that hasn't managed to develop a profitable business so far. Back in November 2020, the company launched a patent infringement lawsuit against Philip Morris. However, this move didn't attract interest from investors. Yet, for some reason, interest from retail investors has soared over the past few weeks, and so has the price of Healthier Choices. And the author doesn't think this enthusiasm is likely to last for long, as the business of the company is likely to still be nearly worthless, as the chances to win the lawsuit are slim at best. But the only issue with the bear thesis is an unlikely scenario in which Healthier Choices manages to win its lawsuit against Philip Morris, or the latter enters a settlement worth over $700 million. So this stock came to our attention by one of the viewers on our channel, Corey. So we promised that we were going to have a look at the stock. So it has a market cap of $452 million and a hefty 105.11 billion shares outstanding. That is really, really hefty. And then we have some disclosures there. That was yesterday, the 17th. There's also okay, this is an older announcement on the 8th of February. So technically, Healthier Choices appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero. Okay, let's have a look. As what did it say again? Strongly bullish. Okay, strongly bullish. All right. Okay, and the MACD histogram is above zero. So the MACD histogram is currently at above zero. So momentum for Healthier Choices as measured by 14-period slow stochastic oscillator is waning. Okay, so you can see that this is the 14-period slow stochastic oscillator dropped. It's currently at 71.6. At some point it was higher than that. This means that investors are less aggressive in the recent purchases and may even be taking profits from position on spot at lower prices. The unbalanced volume indicator is bullish. Okay, the unbalanced volume indicator is bullish. Okay, yes, and the slope is positive, I believe, and suggests that buyers are presently more active than sellers. Okay, so yes, so it has that momentum there, and then yes, the unbalanced volume as regards volume, but elsewhere the momentum is as measured by this slow stochastic oscillator is waning. So it's a mix of things there, a mix of indicators there. So but well, is this stock a buy? Should you buy it? Well, if you want to have a look, just go ahead and put a small amount of money and see how it goes. And if retail investors have found it a liking for the stock, don't bet against them. Don't bet against them. And this stock is really cheap. $0.043. It will be the stock. It speaks for itself. It's saying, just put some money in there. Put some money in there. And if you're not going to put a lot of money, some people will put a lot of money. And then the reason why we're all talking about it, a lot of videos concerning it is all over on YouTube. So it's not a stock you're going to ignore. And it's cool. It's cheap. If you want to get involved, just go, by all means, go and get involved. It is currently trading way above its 10-day trend line. So its 10-day trend line is not exactly indicating any price as such. We can just have a look there and see. So this 10-day trend line is pointing at a price of 0.034, and it's currently trading at 0.43. So it's slightly trading at a premium to those trend lines. But if you want to ignore that, all of that, if you want to rely on the interest from the retail space of the market, if you want to rely on their interest, if you want to rely on the promise that at some point the company might start to make money, start to get profitable, or that it will ultimately win the case against Philip Morris, or that Philip Morris will settle for a settlement, then by all means jump in. But as always, it's a small amount of money. Nothing. Don't get involved with anything you can't afford to lose. Okay. So if you're new to this channel, subscribe, like, and share. If you're already a subscriber, thank you very much for watching this video. Thank you.